Today, we delve into the precarious situation that short sellers find themselves in as their losses mount to staggering figures in the billions. The year 2023 has proven to be particularly unforgiving for these short positions, with a cumulative loss nearing $178 billion, according to a revelation by Cheddarflow, with data corroborated by Yahoo Finance. This significant financial hemorrhage prompts us to scrutinize the top casualties in the short-selling arena for the year. Hey, welcome to AMC Daily. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads, and also enter our giveaway. But everyone remember, this is not a financial advice video. Tesla, Nvidia, and Apple headlined the list of companies where short sellers have borne the brunt of substantial losses, each registering losses in the tens of billions. However, the roster also includes surprising entries such as Coinbase, Carvana, Affirm, and Shopify. These seemingly invulnerable stocks have not been spared, with short sellers witnessing losses of nearly $4 billion on Coinbase, over $2 billion on Carvana, and $1.5 billion on Affirm. Collectively, the shorts find themselves in dire straits, with a net loss nearing the ominous $200 billion mark. The urgency and proximity of the shorts to liquidation become apparent as we examine the dynamics of their position. The relentless upward trajectory of stock prices, coupled with shorts doubling down on their positions, brings them perilously close to the point of liquidation. Pip and Sammy Insights shed light on this vulnerability, emphasizing that the lower AMC price goes or the more it's suppressed, the short's liability increases. This makes extricating themselves from this predicament increasingly challenging. The inevitability of shorts closing out their positions becomes a beacon of hope for those championing AMC cause, as every uptick in the stock value brings them one step closer to victory. To comprehend the accelerating pace of shorts hurtling toward liquidation, let's engage in a hypothetical scenario. Imagine a world where no short sellers had targeted AMC before June 2021. For simplicity's sake, let's assume these hypothetical short sellers initiated positions at $70 per share with a liquidation point at $140, signifying a non-leveraged short position. However, subsequent maneuvers involving leverage and multiple rounds of doubling down gradually reduce the average short position. The short's escalating leverage amplifies the impact of each subsequent round of averaging down, leading to a cascading effect on the liquidation point. This iterative process of doubling down, trickling down, quadrupling down, and toppling down results in a diminishing average short entry point. Even accounting for events such as a reverse split, the downward trend persists, with the hypothetical average short entry point reaching $10.95 in this speculative scenario. Paradoxically, the shorts' increasing leverage, combined with their substantial financial commitment, only marginally elevates the average liquidation point to $11 per share. This precarious scenario mirrors high-leverage situations in crypto or forex trading, where even slight market movements can trigger liquidation. The unfolding drama in the financial markets has not gone unnoticed by the shorts and their supporters. In a desperate bid to reverse their fortunes, they resort to every conceivable tactic to convince AMC shareholders to sell. This includes delving into minutiae such as dilution, attempting to instill fear, uncertainty, and doubt. The argument over dilution becomes a focal point, with critics of AMC's situation exaggerating the impact of even the slightest dilution, such as 400,000 shares. These efforts, however, appear feeble in the context of the larger picture, where the overall float remains resilient and the purported dilution has a negligible effect. The shorts' attempts to disseminate negative narratives are further underscored by the emergence of seemingly fabricated accounts with zero followers. These accounts serve as mouthpieces for the shorts, attempting to sway sentiment by portraying AMC as burdened with insurmountable debt and dilution. Despite the shorts' assertions, the colossal losses they have incurred in 2023 raise questions about the credibility of their narrative. These accounts, often identified as part of fake bot networks, aim to manipulate public perception and coerce shareholders into selling. A notable aspect of this ongoing saga is the acknowledgement that, in certain circumstances, it's reasonable to cut losses for survival. The importance of essentials like food, water, and shelter takes precedence over holding onto every share. This principle applies universally to investments, whether in AMC, GameStop, meme stocks, or established giants like Apple, Tesla, Amazon, and Nvidia. Prudent investing entails only risking amounts that one is willing to part with. Recent tweets by notable figures in the financial domain shed light on the broader dynamics at play. America shares an excerpt from Elon Musk Insights during a Spaces call, highlighting how lawsuits and grievances against companies often serve as smoke screens. Elon Musk asserts that shareholders portrayed as aggrieved are often mere puppets, with the real plaintiffs being law firms representing entities aiming to harm the company. This perspective provides a lens through which to view the orchestrated legal actions and smear campaigns against companies like AMC. The tactics employed by shills and shorts extend beyond spreading fear and disinformation. The insidious nature of attempts to infiltrate companies by instigating legal action against them comes to the fore. The parallels drawn between a recent example involving Polished.com and ongoing efforts to dislodge Adam Aron from AMC Helm reveal a consistent pattern. The suggestion that Adam Aron could be ousted and replaced with an agent of destruction, possibly directly affiliated with Citadel or another influential entity, adds a layer of intrigue to the unfolding drama. As the narrative unfolds, Pip and Sammy tweet draws parallels between historical events and the potential fate of prominent figures in the financial world. The comparison between Ken Griffin and Bernie Madoff scenarios suggests that, even in the face of seemingly impenetrable influence, the tables can turn. The notion that Ken Griffin financial clout shields him from scrutiny and investigation is juxtaposed against the cautionary tale of Bernie Madoff, who, despite paying off regulatory bodies and politicians, ultimately faced the consequences when his hedge fund teetered on the brink of collapse. In this scenario, the holiday season brings forth a reminder that even the most influential figures may not be immune to legal repercussions. The suggestion that Ken Griffin's potential downfall might be triggered when Citadel faces collapse raises questions about the tipping point at which regulatory bodies and law enforcement can no longer turn a blind eye. The parallels drawn between Bernie Madoff's late confession and a hypothetical scenario involving Ken Griffin underscore the fragility of seemingly impervious financial empires. In conclusion, the tumultuous journey of AMC and its battle against shorts unfolds as a gripping saga. The shorts, grappling with unprecedented losses, face the looming specter of liquidation. As the chessboard of financial markets evolves, the moves and countermoves by both sides shape the narrative. The attempts to manipulate public sentiment, infiltrate companies, and shield influential figures from legal consequences add layers of complexity to this unfolding drama. The resilience of AMC shareholders and the potential reckoning for shorts and their backers create an air of anticipation, leaving the financial community on the edge of their seats as they await the next twist in this high-stakes tale. Guys, that's all we have for you today. What is your opinion about AMC stock? Get involved and let us know in the comments down below. Thank you for watching.